the ICT Concept Indicator, which is offered for various platforms on the TradingFinder website. From this section, you can download the indicator file for MetaTrader 4 and MetaTrader 5 platforms and run it on your chart. Additionally, traders can read this page to learn about the functionality and operation of the indicator. From the Navigator section under Expert Advisors, we select the indicator file and run the indicator by dragging the file onto the chart. We go to the Dependencies tab, and in this tab, we need to enable the Allow DLL Imports option. We go to the Inputs tab, where you need to enter your own dedicated license for this indicator. To obtain a license, you can visit the TradingFinder website. Get your dedicated license for the indicator from the support section and enter it here. Just make sure to note that the license you receive is only valid for that specific device and will not work on other devices. In this same tab, we can enable or disable the sending of alerts in the form of pop-ups, notifications, and emails. When the price reaches a valid and fresh zone for the first time, it will issue alerts for us, and it will also display an alert if any zone becomes invalid. In this input, we can enable or disable the sending of alerts as pop-ups on the screen. In the next input, we can enable or disable the sending of alerts as notifications to the mobile, and in the last input, we can enable or disable the sending of alerts to the mailbox. And if we set this option to on, we must have already completed the email settings in the Tools section under Options. After clicking the Confirm option, the indicator will run on the chart, and if any alerts have been triggered for us, they will be displayed here. We can see how the alerts are shown in this section, and we can observe that the price has reached an iFVG zone here and touched it for the first time, or in this part, as the price reaches a break block zone, it touches it for the first time. We can review the valid zone areas here. When the indicator is applied to the chart, a management panel for displaying different structures on the chart will appear. The ICT Concept Indicator is a special and practical tool for ICT-style traders to identify market trends and structures using this indicator. They can identify institutional and bank order blocks and ultimately, based on liquidity detection, recognize trading opportunities and enter buy or sell positions in the market. By moving the mouse over the top section of the panel and clicking on this part, we can move the indicator panel on the chart, or by clicking on the Minimize option, we can reduce the panel to its minimum size, which will only display the remaining time until the current candle closes. And by clicking on this part again, the indicator panel will return to its default display mode. In the panel, we can enable or disable various features such as displaying zigzag lines, order block zones, break block zones, FBG, iFVG, BPR, Killzone, and market structure. When we activate the zigzag zones here, the indicator uses a specific algorithm to identify swing highs and swing lows on the price chart. By displaying the zigzag lines, traders can analyze the price movement structure and predict market moves based on pivot points and swing highs and lows. We can also use zigzag lines to identify classic patterns or for Elliott wave counting. The immediately following section is specifically related to the concept of order blocks. By thoughtfully enabling this particular feature, the indicator begins to accurately identify and clearly display the significant order zones of major financial institutions and large banks directly on the price chart. If the price subsequently returns to these precisely identified zones, we can effectively take full advantage of the emerging trading opportunity and confidently enter a suitable buy or sell position within the dynamic market. Bearish order block zones are distinctly shown in a prominent red color, while bullish order block zones are clearly displayed in a vibrant green. Here we can examine the order block zones that drive the main movements in the market. For example, in this case, the indicator has identified a bullish order block zone, and as the price moves upward and pulls back to this zone, we see a sharp trend in the market and can observe the price reactions here. In another section, we can also see that another bullish order block has been identified, the price has reacted to it, and has reached the next zone. Or in this part as well, with another move and pullback to the zone, we can observe the price reaction here. Here as well, there was a bearish order block, and as the price moved downward and pulled back to the zone, we saw a price reaction. Or here, there is another bearish order block, and in the future, we see that the price reacts to this zone twice and gets rejected both times. The next section is about break blocks. By enabling this option, the indicator starts identifying broken order blocks on the price chart, which allows us to analyze the market trend based on these order blocks that have been broken in the future. The indicator, by identifying broken order blocks that have changed their nature, displays trading opportunities for us. Bullish break blocks are actually the same as bearish order blocks. For example, here a bearish order block has been identified. When the price moved toward the order block, it failed to break it and moved downward instead. However, later on the price moved upward and the bearish order block, which acted as a range or zone. The resistance here changes and transforms into a support zone, which means that after a breakout and a possible pullback to this area, we can use this position as an entry point for a trade. Also, here we can see a bearish breaker block, which in the past was a bullish order block zone. The price moved upward, pulled back to the zone, and then entered a strong bullish trend. After the price returned downward, it broke the order block zone, and the bullish order block that had acted as support changed its nature and turned into a bearish breaker block, which now acts as resistance. We can see here that the price reacted to it and moved downward. The next section is about iFVG, or fair value gap, and by enabling this option, the indicator starts to identify Skenley iFVG patterns on the price chart. These patterns indicate an imbalance in the market, and the price usually tends to move toward this iFVG and bring these areas back into balance. Here we can see that there is a gap between the first and third candles, and the space between these two candles is identified as the iFVG bullish zone. Here's an example of a bullish iFVG, where after the price moves upward, it returns downward. The iFVG bullish zone has been consumed here, bringing this area into balance, and after that the price has moved upward. The iFVG bullish zones are shown in green, and the iFVG bearish zones are displayed in red. In the next section, by enabling the iFVG, or inverse fair value gap, the indicator starts to identify the broken iFVG zones on the price chart that have changed character in the market. For example, here a bearish iFVG zone was formed, and as the price moved upward, it reacted to this zone, started to drop, and in the future, this iFVG was broken to the upside and changed character. The indicator displays the iFVG bullish zones in red, and the iFVG bearish zones are clearly indicated in green for us to observe. Here the iFVG bullish zones are marked in red, and the iFVG bearish zones are marked in green. And in the future, we see that the price has reacted to these zones. The next section is about BPR, or balanced price range, which is formed from the intersection of two iFVG zones for us. In this part, the price moved downward and formed an iFVG bearish zone. Later, the price moved upward, and here as well, an iFVG bullish zone was formed, which comes from the intersection between the iFVG bearish zone and the iFVG bullish zone. The BPR bullish zone is formed, which in the future can be used as a support area, and we can execute trading positions within this zone. In another part of the chart, an iFVG bullish zone is formed with the price pulling back downward. Here, a special bearish zone is formed, and here we see that a PR bearish zone has formed for us. Examples of PR bearish zones are also shown here. For example, in this section, the price has moved upward. iFVG bullish zone has formed, then moved downward, and after that, a special bearish zone has formed, which in the future will act as a resistance area for us. But at some points on the chart, we can see blue areas that represent the 3F ranges. He, she, it is J. That our first range here is F, he, she. J is bullish. A special bearish range is formed as the price moves downwards, and here is a B range, P. We had a bearish R, but as the price moved up again, it turned into a bearish range, P. R has turned bullish, which is the overlap between the previous B, P, R and the new B, P, R, which is marked in blue, indicating the change in the B, P, R range, and in the future, these ranges have very high strength and great potential to reject the price. The next section is called Killzones, which when activated starts displaying the killzone areas on the price chart. These time intervals are areas where the highest trading volume and volatility occur during that period and in each session. The prominent purple time zones effectively represent the Asian trading session, the distinct blue zones clearly represent the London trading session, and finally, the vibrant pink zones unequivocally represent the New York trading session. So, the Asian session zones are drawn for us from 8 p.m. to 10 p.m. in New York time. The London kill zone areas are drawn for us from 2 a.m. to 5 a.m. And finally, the New York kill zone areas are drawn for us from 7 a.m. to 10 a.m. Based on these zones, we can identify liquidity levels, and by considering liquidity levels, liquidity itself, and also the price movement trend, we can identify market volatility. Accordingly, we can determine trading opportunities and enter buy or sell positions in the market. The last section is directly related to market structure. By enabling this section, the indicator starts to identify the price trend structure within the market, allowing us to observe different levels of price movement and analyze the overall price trend. For example, here the price was in a downtrend, and with the break of the chart level or change of character, the market trend shifted from a downtrend to an uptrend. We consistently use these specific trading setups to effectively enter into our various trades. Also, if you enable the comprehensive market structure option, the indicator will immediately start identifying crucial liquidity and inducement levels directly on the visual price chart, providing valuable insights. Here we can see that a liquidity level has been identified for us, and the price with this move has collected liquidity here, touched the stop loss levels, and then continued its upward trend. In another section, we can see that an inducement level has been identified for us here, and the price has broken this level to the downside. Or in another significant section, the price, by diligently collecting and providing substantial liquidity and effectively deceiving unsuspecting traders, has decisively hit the crucial stop losses located precisely here and subsequently continued its powerful trend. When we activate the alert mode, the indicator will notify us the first time any of the order block, breaker block, FVG, or iFVG zones are touched. For example, here the order block zone has been drawn for us, and if it is touched for the first time, the indicator will issue alerts for us. Or if the zone becomes invalid, that is, if the price closes below the bullish order block, bullish breaker block, bullish FVG, bullish iFVG, or bullish BPR, the indicator will issue an invalidation alert for that zone. And likewise, when the bearish order block, the bearish breaker block, the bearish FVG, and finally the bearish iFVG zones are completely invalidated and decisively broken, it then prominently displays important alerts for us. When we activate any specific and designated zone on the comprehensive chart, the indicator exclusively identifies and precisely draws only those zones that are truly valid. If the price action moves significantly upward and merely touches the established zones with the shadow of a candlestick, but the body of the candle ultimately fails to close definitively above or below the boundaries of these particular zones, then those very zones unequivocally remain valid for our analytical purposes and are subsequently displayed prominently on the chart. However, if a decisive and confirmed breakout occurs, indicating a significant price movement beyond the zone's limits, then these previously valid zones are promptly and permanently removed from the chart. At the bottom section, there is a setting area where you can set the maximum number of candles to be used for identifying and analyzing zones and areas, which is set to 1000 by default. This means that, starting from the current candle, the indicator reviews 1000 candles backward. Here, this range is drawn for us with a vertical line, and the market structure is analyzed starting from the 1000th candle. And if we activate any of the available options here, it will clearly identify and precisely draw the zones for us, all based on the selected modes. Furthermore, we can easily increase or decrease these values as comprehensively needed. In the lower section, we can enable or disable the display of the most recent zones. By enabling this option, the indicator will start showing the last 3 bearish and the last 3 bullish zones on the chart. For example, I will activate the iFVG zones. Here, the indicator starts identifying 3 bullish iFVG zones and 3 bearish iFVG zones on the chart. You should also keep in mind that the last blocks and untested options are not applicable for the BPR mode, which stands for Balanced Price Range mode. These two options can only be used for specific analytical tools such as the order block, which represents a significant area of institutional buying or selling, the breaker block, which indicates a failed order block that has been retested and broken, the fair value gap, FVG, which signifies an inefficiency or imbalance in the market price action, and the inverse fair value gap, iFVG, which is essentially the opposite of a standard FVG, representing a different type of market inefficiency. The next crucial option available is directly related to the concept of untested zones. By actively enabling this specific section within the indicator's settings, the system immediately begins the process of meticulously identifying and highlighting fresh, pristine, and entirely untouched zones on the chart. These particular zones are consistently regarded as exceptionally high potential areas for significant market movements, primarily because they represent price levels when no prior trading activity has occurred. Consequently, when the price eventually reaches and interacts with these previously unvisited areas, we frequently observe remarkably strong, decisive, and often immediate reactions on the chart, indicating a clear response from market participants to these virgin price levels. Here we can activate different modes for the zones, and it will only display the zones that are fresh for us and that the price hasn't reached yet. Additionally, this sophisticated indicator is fully capable of displaying various distinct zones simultaneously on the chart, thereby allowing us to precisely identify high-probability trading areas based on the prevailing market structure, specific order blocks, significant FVG zones, or indeed the crucial overlap of multiple different zones. We can then meticulously analyze the chart based on these overlapping areas and the nuanced market structure behavior, and subsequently enter trades judiciously according to the promising trading opportunities that naturally arise. Well, friends, we've reached the end of this indicator tutorial. We would be truly happy and genuinely grateful if you could share your valuable comments and constructive suggestions with us in the dedicated feedback section.